Coming up on Business Incorporated today, Kenya export earnings hit 10-year high. And final draft of Nigeria's startup bill set for September. South Africa Business Confidence Index falls to 93.2 points. And we kick off with market numbers now, with trading with market numbers from Africa, where sentiments were mostly positive at intraday. Nigeria's NGX index inched up marginally by 0.06%, while South Africa's benchmark index slipped by 0.14%. Elsewhere, Egypt's main index climbed higher by 0.12%. Also, Kenya closed Tuesday's trading session in the green. And it's a similar picture in the Middle East at intraday, where numbers were mostly in the green. The Abu Dhabi index was up by 0.47%, while Dubai's index declined by 0.07% marginally. Elsewhere in the region, Saudi Arabia and the Qatari benchmark indexes rose by 0.26% and 0.03% respectively. Now let's head on to Europe, as earning reports are the focus of the week. Let's bring in Conrad now in Frankfurt. Hello, Conrad. Well, Germany's national train operator Deutsche Bahn is hit by strike. A small union has announced to leave work for 3 days. How big of an impact is this for travelers?
It really has a great impact for travelers. Only 25% of the trains of Deutsche Bahn are actually running. Now, of course, if you live in Germany, if you follow the media, if you watch television or listen to the radio, you know that this strike was scheduled for today. Most people decided to rather stay at home and delayed their travel plans. But in particular here in Frankfurt, the city with the biggest airport, thousands of travelers arrive in Germany from other countries every day, and many of them were surprised by the news that they cannot take the train they had to take. What's more, of course, as not many trains are going, the ones that do are pretty crowded, which is a problem because of the coronavirus. You're not only supposed to wear a mask, you're also supposed to keep your distance, try not to get too close to other people, to protect yourself against the virus. And that's something, of course, very difficult to do on a crowded train.
Yeah, quite difficult. Well, Germany and Saudi Arabia have agreed on cooperation on hydrogen, one of the chemicals needed for greener environment and industry. What's the idea, and how big of a project is this?
It sounds very big. The German Minister for the Economy says that by the year 2030, Germany needs an amount of 90 to 110 terawatt hours of hydrogen. Now, I have no idea exactly what a terawatt hour is, but this amount sounds really like a lot. The hydrogen will be used to generate electricity. It would also be used to produce synthetic fuels like e-kerosene. The clue is that you can use this hydrogen without any carbon dioxide emissions, and that's why it's so important for our country. It helps Germany to reach the goals of the Paris Climate Agreement. Why Saudi Arabia? Now, in order to produce all this hydrogen, you need vast surfaces where you can install solar energy and wind energy plants. Here in Germany, the country is too densely populated. It would be really difficult to install all these plants. Saudi Arabia has huge deserts, lots of sun, lots of wind. It's the perfect country to install all this. And then a pipeline is supposed to be built from Saudi Arabia to Germany to transport the hydrogen here. I think it's a very big project.
Yeah, really big indeed. On the stock market today, a number of positive earning reports and profit outlooks came out, but the German index does not seem to be inspired. Why?
Well, Well, let's not forget that the German index is trading not very far away from a record high. So it really needs very strong positive impulses, very strong positive news to inspire investors to buy more. What's more, the discussion about inflation is not going away. You know, inflation is pretty high here in Germany. In July, it was 3.8%. Today, it will be reported probably from the United States that consumer prices increased in July by 5.3%. Under normal conditions, the central banks would be inclined to do something, to change their monetary policies, to stop this high inflation a little bit, to put a bit of a brake on the economic recovery. Of course, all of the central banks here in Europe, also in the United States, have said that they are not inclined to do so for the moment. But sure, people on the markets are discussing when will this normalization of monetary policy happen, what will be the impact on the markets, and that, you know, contributes to a certain amount of hesitancy among investors to decide on further buying stocks.
Right. All right, Conrad, thank you so much. Enjoy the rest of your day. Thank you.
Thank you.
And crossing over to London now, as the FTSE 100 hits the highest level in 8 weeks this morning. Let's bring in Juliana now for an update there. Well, blue chip stock index gained about 28 points this morning. How's the market looking this intraday?
Hello, Laddie. How are you? The FTSE is in good shape at intraday. It started off pretty decent at early morning trading. We're all awaiting the US inflation figures. In fact, I believe they're probably in right about now. It's been helped by a series of trading updates. We've had trading updates from Deliveroo. Lots of insurers have got positive data, as well as the news we got this morning as well, saying that Heathrow have recorded their best month since the pandemic started, way over 18 months ago. 1.7 million people passed through its terminals in the month of July, and that's really raised the stock of IAG, the British Airways owner, as well as EasyJet, the budget airline, by about 0.2%. So at intraday, the all-share is up 0.41%, the FTSE 100 is up by 0.47%, and the FTSE 250 is up by 0.17%. In the currencies market, the British pound is down, though, down on the US dollar by 0.18%, also down on the euro by 0.14%, and down on the Japanese yen by 0.04%.
All right, let's look at energy now. The Competition and Markets Authority received multiple appeals from energy companies, including National Grid and Scottish Power. What's the story here?
Yeah, an interesting story. Not legally binding yet. The Competition and Markets Authority will be making a firm decision in October. This goes back to last summer when we were in the grip of the pandemic here in the UK, and the energy regulator Ofgem decided to put a cap on the amount of money energy and gas firms could get back on the investments into cable and grid networks. I believe at the time they said they wanted it to be no more than 3.6% over 5 years, and Ofgem said they were doing this to protect bills for consumers. Of course, they weren't happy about this, the big energy giants, particularly as there were so many different holidays for payments, and they were losing out on a lot of money. They decided to take it further and lodge some appeals. Now, before this appeals process, the regulator decided to push the cap up to, I believe, about 4%. That still wasn't good enough. But the CMA, the competition watchdog, has decided to go with the side of the energy giants. They don't think it's fair. Ofgem have responded, saying again, doubling down on what they said last year, that they were doing this to protect the consumer. We know energy prices are going to be lifted in the month of October, and there are still about 400,000 people living in poverty in the UK that will suffer from these rising prices. But as I said, the CMA still have until October to make its final decision. So I believe negotiations are still ongoing.
We'll be tracking that. But John Lewis is hiring again after cutting almost about 4,000 jobs in just over a year. What are you hearing about this?
Yeah, good story for the John Lewis Partnership Group. Online sales, of course, have surged over the past 18 months, particularly for John Lewis, who have struggled with high street footfall, but online demand has surged from 40% pre-pandemic to about 60%. So to try and cope with this rising demand, they've leased a huge 1 million square foot warehouse in Milton Keynes from Tesco. They'll be leasing it for 11 years, and to run it and to run its operations, they need staff. So they've put out 500 new vacancies, which is really good news. And they think the warehouse is going to be operational next year. So yeah, great story for John Lewis.
Yeah, that's actually good news and shows a sign of strength there. All right, Juliana, thank you so much.
Thank you, Laddie.
All right, moving on now to Asia. Major Asia-Pacific markets closed mixed on Wednesday. The Chinese markets were muted as the Shanghai Composite closed just above the flat line, while the Shenzhen Component was down 0.24%. Meanwhile, Hong Kong's Hang Seng Index rose 0.21% to the final hour of trade. Also, Japan's Nikkei 225 climbed 0.65%, while the Topix index jumped nearly 1% to 1,954 points. On the flip side, South Korea's Kospi dipped 0.7%, and the S&P ASX 200 in Australia was up 0.29% to close at 7,584 points. And U.S. stock futures were little change ahead of a big reading of inflation that could determine how fast the Federal Reserve moves to take away monetary stimulus. Futures contracts tied to the Dow Jones Industrial Average gained 23 points. S&P 500 futures were slightly lower. NASDAQ 100 futures were off by 0.3%. July's Consumer Price Index reading is expected to be released today. However, let's see how the market closed yesterday with our correspondent, Maria Bird. Do take a listen.
U.S. stocks were mostly higher on Tuesday, drifting to the upside as traders weighed concerns over the Delta variants, latest spread against optimism over an ongoing rebound in economic activity. The Dow adds 163 points, or 0.5%, to end at a record high, as the infrastructure bill optimism offsets virus concerns. The S&P 500 and Dow each reached record intraday highs, while the NASDAQ dipped. A day earlier, both the S&P 500 and Dow sank, dragged down by energy stocks amid concerns over reinstated travel restrictions in China due to rising coronavirus infections. Investors on Tuesday eyed the passage of a sweeping trillion-dollar infrastructure bill by the U.S. Senate, with the legislation to rebuild roads, bridges, and other physical infrastructure across the country. Now headed to the House of Representatives. Shares of AMC Entertainment gained after the movie theater operator topped second quarter revenue estimates, with customers' return to the theaters taking place more forcibly than anticipated at the start of the summer. Shares of peer reopening stock Planet Fitness, however, dipped after Gym's full-year sales and profit outlook missed estimates, suggesting a slower than expected consumer return to in-person workouts. Investors this week have apprising the extent of growth slowdown that might be triggered by the latest resurgence in domestic and global coronavirus cases.
And that's Maria Bird, the Channel TV correspondent. Tell us what happened in Wall Street yesterday. Moving on now, oil prices in early Wednesday consolidated strong overnight gains as a bullish outlook for U.S. fuel demand outweighed concerns about mobility curves in Asia with the spread of the highly infectious COVID-19 Delta variant. Industry data showed U.S. crude oil and gasoline inventories fell last week, while the U.S. Energy Information Administration raised its forecast for fuel demand in 2021 and said consumption in May through July was higher than expected. U.S. West Texas Intermediate crude futures rose 0.1% to $68.35 a barrel, adding a 2.7% jump Tuesday. Brent crude futures inched up $70.66 a barrel, following a 2.3% gain from Tuesday. According to analysts, oil prices rose on hopes that oil demand growth will outpace supply, despite the spread of the highly transmissible Delta variant of COVID-19. And now to the metals market. Gold edged higher early on Wednesday as concerns over the rapid spread of the Delta coronavirus variant spurred some safe haven buying through gains were capped by bets and early tapering by the U.S. Federal Reserve and a firm dollar. Spot gold was up 0.2%, recovering some ground after 4 straight sessions of declines, while U.S. Gold futures rose 0.1%. Silver rose 0.1% to $23.34 per ounce, while platinum gained 0.9%. Meanwhile, other precious metals such as palladium fell 0.2%. And after the break, our focus will be on the Nigeria Startup Bill. That's the focus of our conversation. After the break, do stay with us. Welcome back. You're watching Business Incorporated live on Channels Television. Well, to our next conversation now. In May, key players in Nigeria's tech ecosystem met with some representatives of the Nigerian presidency to discuss one thing: the creation of Nigeria's first startup bill. The bill is being put together to foster the growth of startups in the tech ecosystem in Nigeria. And in May, a town hall comprising some stakeholders in the space as well as some government representatives discussed the need for a startup act, especially for tech companies. Why is this bill important and why now? Samson Olatunde, founder and digital CEO, Tribe International, joins us now to discuss this. Great to have you.
Thank you. Thank you for having me here.
Yeah, so tell us about this bill and why it's coming at a time like this.
Yeah, the startup bills are a collection of regulations with the intention to boost the incentive of young people to start businesses, investors to invest in potential enterprise, and other ecosystem that may be of help to startups. And then why is this coming right now? Because African entrepreneurs have been armed by different regulations that has happened over the years. I mean, for instance, in Nigeria, you have the access of the Twitter ban, you have the access of the Okada ban, and then this has really affected the startup because that's where we have majority of people earning from and scaling up from their innovative idea. So I feel that this is coming at the right time because it will stop the elderly politicians from bullying those of us who are young, who are innovative to achieve more at this particular time. So I feel that the startup path is going to be a major change for us to achieve more and give us more incentive as young people.
Right. So, but what do you think will be done differently with this bill? Because I'm sure that they'll still embrace some older policies, you know, adding to whatever comes up next.
For me, I think that with this, what will be done differently is to think around the fact that it can increase our local support for entrepreneurs. We should look at it from an angle that is going to attract global venture capitalists to get into the narrative and even see that our country is ready for business this time around because of so many things that has happened because of the pandemic. If I look at it from another angle, it will increase the innovations of young people, it will create more jobs, it will navigate government and entrepreneurs to be able to see how things can be done and for us to be able to increase more startup in our country, Nigeria.
All right, so you did mention the Twitter ban and the Okada ban, which affected, you know, most startups, and, you know, they've had to actually pivot. And also they had the cryptocurrency ban with banks, you know. I'm thinking, how would this bill actually help with policy making?
So for me, I think just like every other person is trying to say that we need to review the 1999 Constitution, because that's like a legal framework. And if any decision is going to be made around the startup and we have this framework, I'm sure that the government, they're going to think again, not just coming with the ban of Twitter or Okada of the cryptocurrency and all of that. But if it's a legal framework, it means that they have to call the stakeholders together. They have to have that meeting to discuss about it. I think it's because we don't have a startup bill. That's why you see that the government just come with any policy that affects startup. So with this coming up, it's going to be an advancement to startup, an advancement to stakeholders, an advancement to investors that are even bringing their money to invest into these startups. So I think that it's going to be a win-win and it's going to be something that the government needs to call the stakeholders before even deciding to go through any route of decision they want to go into.
Okay, but how soon do you expect this bill to be passed, and how soon do we expect to feel the impact of it?
For me, I think that it's something that we are expecting to happen immediately, if not even now, because most of us who are startups, we need this to be able to guide us. Many investors need this at this time before they even want to invest into startup or enterprise that has to do with startup because of so many things that they have experienced. So just imagine the kind of money that people that invested into Okada, the kind of money they have lost as investors. Now, not to talk about other businesses that we're talking about. So if it's done now, it will be an advantage to us who are into this business, who are startups. And for me, I think that implementing it will go a long way to help a lot of young people to trademark. It will help flexibility. There will be trust fund that will be available. And then this can be aligned with the startup bill that we are talking about. So I believe that it's something that we're really expecting to happen almost immediately by our government.
All right. So, but what's I'd like to have your outlook for ease of doing a business in Nigeria, knowing that we don't rank so well in that counter?
For me, I think that many things are going against us. There's no good infrastructure facility. People have difficulties in accessing funds or in terms of loan. The commercial banks are not really helping the SMEs because you have to know somebody to know somebody. And all of the scheme that is available to say that is empowering young people, many of them, we don't have a direct access to it. So I think that with this Startup Act bill, it's going to help us in a way that, for instance, I'm thinking that in the startup bill, they should reduce the tax prepaid for the next 3 years. I mean, startups should not even pay tax so that they can be able to structure their business effectively and have it like something that can go beyond measures and become an institute that people can plug into. I'm looking at innovation idea becoming like a silicon. For instance, in Yaba in Nigeria, it's becoming like a silicon. I'm looking at a way where we have access to trust fund that can help and navigate, help scale up what young people are doing in terms of starting their business or running their business as small enterprise in Nigeria. For instance, the procedure by which you are going to trademark your idea, your patent right, national and internationally, should be more seamless. These are the things we feel that should be in the Startup Act, and then it will make it easier. So when we have all of these things, I feel that the ease of doing business will be much more easier for us in Nigeria. Right. And then we can now trademark what we are doing around the Tunisia kind of strategy, of what they've implemented around their own country.
All right, Samson Latinde, thank you so much. We'll have to leave it there. Now, Samson Latinde is the founder, digital CEO, Tribe International. Thank you for coming on the program.
Thank you for having me.
Moving on now, South African business confidence fell to a 9-month low in July after a week of deadly riots, looting and arson cost the economy 50 billion rand. Lost output and held at least 150,000 jobs. Confidence index compiled by the South African Chamber of Commerce and Industry dropped to 93.2 points from 96.2 points in June. The group known as SACCI, which represent the lowest since October 2020. Riots and looting erupted in the eastern KwaZulu-Natal province and the commercial hub of Gauteng, last month after the jailing of former President Jacob Zuma on contempt of court charges. Violence marked the worst civil unrest in South Africa since the end of a white minority rule in 1994. At least 354 people dead and thousands of businesses looted and burnt down. Meanwhile, the Nigerian Consul General in South Africa, Abdul Malik Ahmed, has made another appeal to the Nigerian government for financial assistance to businesses affected by the recent civil unrest in South Africa. His appeal comes after doing a walk about it, Jeppestown, downtown Johannesburg, where he met several business owners who claim they lost their goods and property worth millions of rands. Several Nigerian businesses in Gauteng and KwaZulu-Natal and some parts of Mpumalanga, including motor spares shops, clinics, salons and small grocery stores, lost stock during the looting.
Plans are underway to see what help can be rendered to these Nigerians. You know, they spread across KZN and Gauteng, you know, and in all, they have lost so much. In this particular shop alone has lost over close to 10 million rands. Elsewhere in KZN, you know, the statistics of loss we have indicates that about 6 to 7 million rand of property was also damaged and destroyed. We have compiled this and we have sent it to Abuja seeking for possible assistance, because as it were, most of these people can hardly feed now. They have lost everything. They have lost everything. You know, they can't even look after their family, let alone begin to contemplate to start afresh. You know, some of them are lucky, they are beginning to start again, while others are completely in a dire situation. We have made this plea to our government, and we're hoping that in due course something will be done, no matter how little, to help them in one way or the other.
And that's Business Incorporated today. Thank you for watching. I'm Ladi Williams. Bye for now.